Welcome to Xylostar's another weekly market forecast. Here we have Mr. Amir and Mr. Samir to join us today for the market updates.
Financial markets are going crazy with all these tariffs wars around the world. Now we have the S&P 500 dropping, the Stock 600 is dropping, DAX is dropping, Nikkei 225 has reached the lowest price it has been since last year. And on the other hand, when we go to crypto, we have BTC is becoming more volatile in the last few days. Ethereum is becoming for free, and not literally. And we have gold actually consolidating after breaking records every other day.
We victimed the biggest daily drop in the US stock market since 2020. And by the way, we got all the details of the Donald Trump tariffs on other countries. And by the way, China and European Union decided to retaliate.
All right, hi guys, welcome back. My name is Simon Raslan. I'm a senior technical analyst at Xylostar. Here's our Xylostar terminal on TradingView. Make sure to follow that in order to get the latest market updates as soon as they are published. So, as you guys have heard in the intro, today's that past week financial markets, and also we're expecting this upcoming week to be a little bit momentumous, if that's a word in English. Okay, full of momentum. Yeah, full of momentum. So, to kick it off, we'll go to NASDAQ. As we can see, NASDAQ has crashed, which was pretty much expected after the break and retest for this trend line of the previous uptrend. And also we have the tariffs that Donald Trump had it looming, and it's finally placed in action. So after this crash, we can see that NASDAQ now is at a solid support that has been respected before, let's say at the levels of 17,000. So from here, we might see a slight continuation, but the most probable scenario is a retracement. Markets may go up to the resistance of 18,000 before a continuation to the downside. This fall of NASDAQ will probably continue until some aid come to financial markets to deal with all these tariffs that are destroying international businesses. So going to Nifty50, also we have seen a slight fall down to Nifty50 after it has moved up from the strong support at the level of 22,000. Now from here we might see Nifty50 consolidating for a little or continue in a fall to the downside, retesting the support level of the 22,000 once again. And these tariffs are actually in one way or another, they are affecting every other single economy around the world. All right, so this is about Nifty50. Going to Bitcoin, as we can see that Bitcoin was volatile and was majorly volatile in the past while since the beginning of March, and it's been consolidating for quite a amount of time. And even in the past week, since the beginning of April, also we can see that Bitcoin has been pretty much very volatile, consolidating within this symmetrical triangle. Now this symmetrical triangle is not also too solid, right? Because the let's say the points of interest or the lower lows and higher highs that are creating this symmetrical triangle are not also pretty much optimal, because you could see that we have a more respected trend line here, but markets went above it and fell down, so that could have been a liquidation. But also previously to it, market went down to the support slightly below it, below these lows, and spiking up and falling down. So as you can see, it's pretty much very volatile. So it's unpredictable right now what Bitcoin might do, but we see this resistance 88,000 and 78.5 thousand as a support and resistance that Bitcoin might keep consolidated in. Now you guys should keep a very important information about Bitcoin in mind, is that which is every other stock market is collapsing, right? And even though Bitcoin for a bit collapsed, however, it is finding strong, I won't say actually collapse, let's say it fell down to support from resistance. But Bitcoin is still holding its value compared to all the other international biggest indices, like S&P 500 went down 6%, NASDAQ went down, DAX went down, Nikkei went down, Stock 600 went down, every other index, Nifty50 went down, but Bitcoin is still holding itself. So even though it's considered as a volatile asset, we still are seeing strength and Bitcoin holding its value in financial markets, right? So financial markets nowadays are pretty volatile. So keep an eye on whatever you do to make sure you follow proper risk management whenever you decide to go into any trade. So now speaking of gold, gold actually also fell down to the 3020s, which also we can consider a crash. It was actually pretty much expected. So we had a falling wedge pattern or an expanding wedge here, right? Which market crashed, gold fell to 3060 to the support, it traced and then consolidated, and then we got this wick on the trend line of the uptrend. So this fall actually was technically pretty much expected, and also we needed the market to liquidate for so many reasons. The expanding falling wedge here, the uptrend market being at its highest of all time. Yes, and it was actually pretty volatile last Thursday. So yes, it was expected to crash, but also did some drama with this massive retracement and also this liquidation or manipulation, we can call it. So anyways, after this crash, it is at a strong support and also at the lower trend line of this uptrend on 1 hour time frame. So we can expect gold to retrace, might go up to this resistance or fill this fair value gap, or might go up actually to 3080s, but most likely it will be retesting the 3060s before a potential continuation to the downside, right? So this is about what is happening in financial markets. Whatever you do for the upcoming week, make sure to follow, to keep an eye on fundamental factors, right? Because technicals now, yes, they are working, but like in gold, for example, it followed technical pretty nicely actually past week. However, still these tariffs that are coming with every other monetary policy pumping into the market, we might see some spices to be added on the market for this coming week. So yeah, this will be it for our market updates for the upcoming week, and see you in the next one.
Good day everyone and welcome to our weekly market update. Amir Amidian here, Senior Fundamental Analyst at Xylos, the head office which is located in Dubai. Last week financial markets got a slap from the bears and we had the biggest daily drop in the US stock market since 2020. Volatility index, or better to say VIX, reached to 45, which is the highest number since August of 2024. And from the other hand, because of the panicking and rush to the bond market, the yield of 10 years treasury bonds dropped below 4% for the first time since October, which was incredibly shocking. Traders and investors paired their bets about the euro and dollar for the interest rate. Now they expect 5 rate cuts in 2025 after the different analysis by the big banks like JP Morgan and Morgan Stanley about the possibility of recession in US last week. Last week, the main focus of the economic indicators was on the employment sector in the US. We got the latest update about the labor market, and let's crunch the topic more. Let's start it with the JOLTS, or better to say job vacancies. We got it lower than expected. The number of the job opening was little change at 7.6 million in February over the month. Hires and total separation held at 5.4 million and 5.3 million respectively. Job openings was little change at 7.6 million in February, but was down by 877,000 over the year. The number and rate of hires were unchanged at 5.4 million. For the ADP, which is tracking the private sector, it surprisingly released higher than estimates by 155k. Nella Richardson, chief economist at ADP, mentioned that despite policy uncertainty and downbeat consumers, the bottom line is this: the March top line number was a good one for the economy and employers of all sizes. Eventually, the NFP was better than expected by the numbers, although the unemployment rate jumped to 4.2% and average hourly working cost dropped, the participation rate resisted. It raised the doubts regarding the recession in the US little bit, as the White House economic advisor pointed out, and also Donald Trump message on Trust Social platform. The last bullet was the speech of Jerome Powell, chairman of the Federal Reserve, on Friday evening to Dubai time. He mentioned that the economy is still strong, although the unemployment little bit got higher, but we have a good economy which is in a good shape. This week, from the geopolitical side, Donald Trump announced sweeping new tariffs, including a 10% baseline on all imports and higher rates such as 34% on Chinese goods and 20% for the European Union products, and countries decided to retaliate like China and European Union. Let's jump into the upcoming week. For the upcoming week, I want to start again with the economic indicators. Next week, the main focus will be on the US, especially about the inflation, because we are going to receive the CPI number for monthly and annually basis on 10th of April, which is Thursday at 4:30 p.m. to UAE time. And also we are going to receive the PPI plus the Michigan Consumer Sentiment on Friday at 4:30 p.m. and 6 p.m. respectively. On the other hand, we are going to have the GDP number monthly basis at 10 a.m. also on Friday, and different speeches like Bank of Japan government order plus the FOMC meeting minutes, which means we are going to receive more details about the latest meeting which held by the FOMC participants. Stay tuned with the financial market by the Xylostar.
Thank you for watching us. Do not forget to subscribe, like, share, and comment.